What's up guys, welcome back to the channel. This is actually the first video of the year 2024 and this is still me, Solomon Wisdom, but you can actually call me Engineer Solomon because I got my degree last year. This is the first video and I want to start off by saying a huge thank you to all my fans and subscribers. You guys are the best and I'm so grateful to have you along on this journey. I'm very grateful to have you all as we journey to consistency and profitability in the financial market. Now, a lot of questions has been coming up. People asking me, why are you not sharing setups? Why aren't you trading again? They said they've not been hearing from me. Some even checked on me asking if I was actually okay. Now, my response is that I'm very okay and I'm fine, okay? So as you all may know, the forex market is still in a slow period right now. There are no many setups, you understand? The setups I'm seeing in the market isn't really interesting. So instead of taking any risky trades, I'm just focusing on analyzing the market and I want to make sure I'm sharpening my skill and putting my best foot forward, you understand? But don't worry, I will share great content this year. If you follow us here on our YouTube channel and you follow our content where we teach how to be profitable trading smart money concepts, I'm going to share a lot of content this year and I hope we have more profitable traders because last year we were able to impact a lot of knowledge which a lot of people benefited from. This year is going to be a very good year and shout out to those who enrolled for our mentorship and congratulations to each and every one of them. Back to the content of today's video. What I'm going to be doing in today's lesson is that I'm going to analyze some currency pairs to see how price is reacting to them. You know, why I'm not actually trading this period is that the forex market is still slow. I'm still seeing slow price action and I trade smart money concept. So before I can actually start trading this year, I need to start seeing my strategy giving me nice setups, at least 70% before I start trading, based on the time frame I'm looking at. Okay, if you drop to the lower time frame, a lot of trading opportunities are there, but based on the time frames I trade, I'm not seeing what I want in the market. So it's of no use taking unnecessary trades. So that's what we're actually going to do. We're going to walk through different pairs. Especially, I'm going to start from the number one pair on my list, which is one of the favorite trading pairs I look at, which is this NZDCHF. This is one of my favorite pairs I look at each day I analyze the market. So after that, we're going to look at the most famous pairs, the likes of EURUSD, GBPUSD, maybe USDCAD, and EURGBP. Looking at this particular pair, so we're going to do that. We're going to start from the 1st of January to the current date. If smart money concept has started playing out in the market perfectly, if we are seeing good trading setups, we start trading. But if market is not actually presenting a lot, or will I say enough setups in the market, I don't think there is any point risking anything in the market right now. So let's do this. Okay, I'm actually at October. So let's restart this and see. So we have to check from the 1st of January, okay? So where is the 1st of January right here? Okay, this is the 1st of January. So looking from the 4 hours time frame, because I usually do top-down analysis when I'm analyzing the markets. So looking from the 4 hours time frame, what you can actually see, if we look from this red line we see right here till date, if we look at the price action we have right here, what you can see is that the price is actually ranging. This is what we call slow price action. So much is it happening in the market. So what I'm showing you right here, I've actually seen it before, because when I actually went to the market and I saw things like this, I wasn't going to trade this because this is actually a slow price action. This being one of my favorite pairs and seeing this kind of slow movements in the market, I don't think there is any point trying to trade from here. So what we can actually see, if you try to analyze, we can see we have this break of structure to the downside and this candle moved with a lot of momentum, leaving inefficiencies. So anyone that is looking to trade might actually be looking at a zone right here. They might be looking at these zones. Now we've seen price build a lot of liquidity because this low price action can actually be called a liquidity pool. Now this is a very nice area people can be looking to trade, but we're actually analyzing from the 1st of January till date, today being the 12th of January. Now what you have to do is you have to drop to maybe lower time frame to see the price action better. Now dropping to the 30 minutes time frame. So here's the 30 minutes time frame and you can actually see the red line here. So what you can see is that price has actually been ranging. So if you try to zoom in to see the price action we have right here, you see we don't even have enough inefficiencies. This is actually a balanced price action right here. There is no inefficiencies. Okay, I'm seeing some inefficiencies and price coming back to rebalance inefficiencies. The only significant price action I'm seeing here, because if you try to mark, this is actually the high of the range. This is the high because this is a very large range right now. So this is the highest high of this particular range. If I try to mark and extend, and I think here is the lowest point of this range. So price being in this range, personally, I won't look to trade from this kind of range. Now I can actually see something right here. What you can actually see if you try to read the internal structure, because at some points we do trade internal structure. So what you can see is that we have a break of structure to the downside right here, another break of structure right here, that is price pushing to the downside, right? Now over here we have a strong pullback which goes to mitigate things. Even this break of structure came back to mitigate something at this particular high we have right here. Okay, it mitigated something after it swept liquidity, right? Now we see price break structure, pulls back, comes to mitigate something maybe at this particular area. Even we have a little inefficiency here, but I don't think that really matters. Now price pulls back, break of structure to the downside again. So if you're reading or you are trying to trade the internal structure, so this is what it should look like. And after this break of structure, what we see is that price switch in structure from this area, and this is where we got a shift in structure. So I can actually consider to take a trade from here, but I don't have interest in taking any setups right now. So what you can actually see is that we have this break of structure and we have this nice inefficiency with a very nice zone right here. This is more like a range created demand zone. Now if you actually looked to trade from this area, this is a nice setup. Even though you see the price action is very slow, you can see that you see how the candles are moving. We're not seeing candles with large bodies. So this is a very slow price action. If you actually took this trade, you will get tired waiting. Okay, so we have to, like I said, this is one of my favorite pairs. So we have to look at famous pairs. Okay, pairs people trade the most. So this is USDCAD, and it's one of the most traded currency pairs, and we are actually on the 30-minute time frame. So let's see what we have now. Remember, we're analyzing from the 1st of January. So where is the 1st of January? Here is 29th, and here is the 1st of January. So we actually have nice price action right here, because from what you can actually see from this 1st of January is that we've seen big candles with big body, or will I say large body. You see we have this push to the upside. You see that large momentum push to the upside. Now it's low price action, a retracement, a move to the upside. This actually looks like a news event. This price action we have right here, it looks like maybe a news event, right? And it's actually USD. So let's zoom in properly and see what we actually have right here. So as a smart money trader, what we usually expect to see in the market is a push, a retracement, right? Another move and another retracement. This is what we usually want to see when we move to the price chart. So let's look at what we have right here, the price action we have right here. So what you can actually see is that price pushed to the upside, right? And we have a retracement. So this retracement is just price pulling back to PDRAs, okay? And this PDRAs are point of interest which we usually look to trade from, right? Now it's pulled back. Now we have another push to the upside, a retracement which spikes below this low, even though it closed slightly below the low, but this was a news event, just like I said. Now we have another push to the upside, a retracement, push to the upside, a retracement, and push to the upside. So smart money concept is actually working, because you might be getting involved from these setups. The only difference is that if you're looking to trade maybe from other blocks, you might not actually get the right trading setup, because from what you can see here, when price retraced, price pulled back to this inefficiency right here just to rebalance this inefficiency, even though we have more inefficiency at these lows. So if we are trading from this fair value gap, nice trade setup, and you see price move to the upside. Now if you are actually interested maybe from this range created demand zone right here, price failed to get to your zone. Now a push to the upside, price comes back. I didn't actually see what price mitigated, but this is a nice pullback and a continuation to the upside. Now at this point, this is the price action we actually seen. Now we see price move with candle, with momentum, and now we're seeing inefficiencies, which is something I love to see in the market. Now anyone that is looking to trade from here, maybe marked a zone from here, because you can see this candle has large bodies, right? So this is a push to the upside, a zone has been marked. You see price comes back, mitigates. It seems like price spikes below this low. Okay, you see price comes deeper, spikes below this low, and we see that push to the upside, which breaks structure. So price almost respected this zone. Maybe if you added few pips below your zone, you must have gotten this trade. Now from what you can actually see right now is that we have another zone right here. Definitely we have another point of interest, because we still have an inefficiency right here. Now what you're seeing is price comes back once more. You see another spike below the zone. Now you see price is reacting to the upside. So this is what we're actually seeing in the market right now. Okay, so it's now left for you to decide what to trade. So this is it for USDCAD. From 1st of January to about 9th of January, the price action wasn't too satisfying, but from here we're seeing nice price action, right? just that price is just spiking below our zone. If you are trading USDCAD right now, you have to add few pips below or above your zone to escape this stop hunt. Okay, so let's see the next pair. Remember, we're analyzing the most traded pairs, so I don't have to waste time. Let's look at EURGBP, right? That pair is one of the most traded pairs, EURGBP, and it's still on the 30 minutes time frame. Remember, we're looking at the lower time frame. 30 minutes is not actually too low, but it's one of the lower time frame when I'm analyzing the market based on how I trade. So we're starting from the 1st of January. So this is actually 1st of January right here. So this is 1st of January, and after that we see momentum kicked into the market at this particular area. You see how price pushed massively to the downside. So but this push still don't have inefficiencies. If you look closely, you're not going to see any inefficiency right here. So to tell you that institutions are not actually active this period. Okay, so we have to wait for them to be active so we can trade with them. We know you will trade institutional footprints. So for you to trade this strategy, you have to trade with the institutions, right? So from what you can see, price pushing to the downside, a pullback, and this pullback actually went to rebalance. If you look closely, I think we have an inefficiency right here. If I try to zoom in, okay, it didn't actually get to the inefficiency, but we have an inefficiency right there. Price pushed to the downside. We have a break of structure right here. You see, at first price spiked, not actually a break of structure, a spike, and we have a pullback that comes to mitigate something right here. And after the mitigation, price pushed the downside with momentum. So if I was actually looking at this might be one of the setups I might look to trade, right? I usually trade from order blocks and demand and supply zones. So this will be the area I might be looking at, but as you can see, price didn't actually get to that area. Instead, it rebalanced this inefficiency and it moves away to the downside, and this is actually nice. Now what you can actually see from here is that we still have another range created demand zone right here. Depending on how you refine your zone, you might decide to refine your zone down to this area. This depends. This is actually based on personal preference. Now you see price returns correctively to the zone, mitigates, and you see a reaction to the downside. Now price is actually pushing to the upside. So my remark on EURGBP is that it's actually respecting smart money, and smart money still plays out. So let's see the next pair. So here is the next pair. This is GBPUSD, one of the most traded currency pairs in the forex market. So here is the 1st of January from this area. This is actually 1st. From the 1st and 2nd of January, we see price moving with momentum to the downside. So if I was actually looking at the market on the 1st of January, I wasn't looking at the market. So if I was doing that and I wanted to trade, this is a very, very nice area. Okay, you can see we have this momentum. I'm seeing these inefficiencies. The way I trade, this is a good setup for me. Now extending to this area, what you can see is that price spikes above this level. You see, spikes above the zone and retraces to the downside. And like I said, this is actually a news event. This happened on 5th of January. So let's go to Forex Factory and see. So here is Forex Factory. Let's go back in time. Let's go back to 5th of January and see. So I have to apply settings. So this is 5th of January and these are the news events. Okay, CAD had an unemployment change. CAD equally had unemployment rate. So these are high impact news. You see, USD pairs, they had non-farm employment change and unemployment rate. So these are high impact news that can actually affect the market. So that's why we're seeing that price action at that area. So let's go back. So this is actually why you are seeing this price action, and this might possibly be the reason price spikes above the zone. But we have little retracements, and this is the price action we actually seen, price ranging at this area. But we just hope maybe by next week market will kick off and we're going to see high probability and nice trading setups which can actually make us money this year, because this year is going to be one of the best year of our trading journey. Okay, so let's look at one more. Which pair have we not looked at? Okay, we've not looked at EURUSD. So let's see what's happening at EURUSD. So this might actually be the last example. This might be the last one. This EURUSD, I'm just looking at the most famous pairs, the most traded currency pairs. Let's see what we have right here. Where is the first? Okay, I'm already at the first. This is the first day of January 2024, and you see similar price action on EURUSD. So if I was actually looking to trade, this is going to be a very nice area to trade from, right? This is a very nice area, but since price didn't come back, we have this push to the downside, retracement, and a continuation to the downside. This happened on the 3rd of January. Now, if you're looking at this area, we have an efficiency right here. People might be looking to trade maybe from this zone right here, but what we see is price comes, spikes above the zone, and we have a push to the downside. And this is actually the news event right here. You see on 5th, this is actually a news event. Now, what this actually did is that it came back to rebalance the inefficiency we have at this particular area, right? You see we have inefficiency, it rebalances the inefficiency, and it's pushing to the downside. Right now, this is a range. Price is in this particular range right now. This is actually the range, right? This is actually the range right now, but price is slow at this particular area. So this is why I'm not actually trading right now, but from next week we entering the market and we're going to make a lot of money. Now, this year, almost 70% of my time I'm going to spend it on my mentorship, because I'm starting a mentorship this year. So if you are interested in joining the mentorship, check the link. You're going to visit our website and read every information about the mentorship, and also enroll if you're interested in enrolling for our mentorship. So 70% of my time I'm going to spend it on that mentorship. I'm going to make sure that anyone that's enrolled for that mentorship is going to be profitable. Okay, they're going to enjoy the money they paid. I'm not going to be the kind of person that will take people's money and not actually impact the knowledge they paid for. I'll make sure they get the knowledge. I'll still try to share free content that is going to help traders become profitable. I'll try my best to share free content too. So thanks very much, and thanks for watching this particular video. I'm still Engineer Solomon, and see you in the next lesson.